Hi everybody, Russell here. So let's get into the weekly essay video supplement here. This is really handy. So I'm going to click on viewers, my watch lists, and on the drop down here, click on new watch list. And let's do this. Let's call this shopping stocks and click on enter there. That'll load it up. And let's put them in. All right, so mts.ax, col.ax, and wow.ax, enter. Okay, so come in over here. Let's graph all the stocks. And I want to show you something interesting here. So I've put on sales. Now let's just remove it just to show you how we put these on. So add parameter, VectorVest fields. I'll put on net profit margin to begin with. So let's do this, make an area graph. Add parameter, sales / market capital. And here we are, sales in millions. Let's put that on and change the type to being an area graph. And we'll change the style, just make it jump out a little bit different here. So let's change it over here. And there we go. Okay. So you can see for this one here, net cash, look at that. You can see that the net profit margin has been declining and sales have just ticked up a bit. But if you pull it back just a wee bit over here, you can see that sales have been off quite a bit. And net profit margin is starting to come off. So this is starting to impact that stock. You really want to see the sales increasing along with net profit margin holding at least steady, if not increasing. So a bit of a mixed bag here. Net profit margin declining. Sales, although they've come up recently, overall the trend is down. That's why you're seeing this stock here under a bit of pressure. Let's just clean this up just a bit more to make it easier to see. Okay. Woolworths. Well, Woolworths sales have been going up. As we've seen in the news there, more people are buying toiletries, meat, rice, whatever it might be, stockpiling up. Certainly a couple of months back we saw all those images on TV with people rushing out, buying as much as they could get their hands on, right? So I agree. I'm seeing that in the sales. But look at this, with the net profit margin, I'm actually seeing it decline. So as a result, the net effect is not as strong as I hope for it to be. Why is it then that the share price has been rising? Well, market timing. There's your market timing. Market is going up. There's our confirmed up. Market powers up. It pulls shares up with it. That's why market timing is so important. Okay. Well, what about this one here? Coles. Well, this is interesting. Coles' sales have pretty much held steady. Look at that, for quite some time. All right, it's only recently just been analyzed here by VectorVest, recently been listed, so we haven't got a long track record to go by. But nonetheless, sales have held steady, and look at that, net profit margin continues to hold steady, although you see it drop from 38.5 thousand million down to about 37.5. If you pull it back just a bit over here, you can see it's pretty much held steady. So I like this because net profit margin's been increasing and sales have pretty much been holding steady. So that's the pick of the three on my take using the power of VectorVest. Okay, well, let's do this. Let's close out of here and let's ask ourselves the question, are we going to put all of our money into 3 shopping center type stocks? Of course not. We need some diversification. Right, this is where portfolio diversification comes into play. So the last thing I'm going to do here, and that is I'm going to add in some diversification. So I'll put in JB Hi-Fi, still in the retail game, but they sell electronic goods, right? So not food and liquor type sort of sales. This is electronic goods, but still. All right, so a bit of diversification there. And then I'm also going to throw in Fortescue Metals. We've spoken about this one quite a bit in recent months. It's a great mining company at the moment with some excellent fundamentals and technicals behind it. And look at that. Okay, so we've now gone, historically there we had a price of $20 versus a value of 15. We've now gone price of 25 versus a value of 26. Okay, historically there we had an RV and RS that were barely above 1. Look at that. Nice uptick in the RV, a good uptick in the RS. This is a good combination of fundamentals and technicals on average now. Let's right click. Let's view the watch list average graph. And look at that. Look at the earnings really powering up in recent times here. And over here, not a huge discount. to the price versus the value, or a massive premium being paid. It's fairly sort of priced up. It's good. I'd like to see that there. Ideally, I'd like to see it undervalued, but nothing wrong with that. The price and value there, it's fairly priced up, and if earnings continue to power on, you watch this will move up. Net profit margin there, 6 odd %. So look at that. We've improved our net profit margin there. And look at the sales taking place too. Let's right click and bring in the area graph there. So there we are. We've improved it a bit further. Now, the last thing to have a look at here, Medicash. Now look at Medicash. The RS was below 1. So that's consistency, reliability of those financials. They were under pressure. If I graph this given stock here, remember here we saw quite a bit of pressure that the stock was under. Okay, so sales have been sort of sliding a bit here, net profit margin sort of holding sort of steady, but very low margin at 1.3 odd % with the earnings falling. So why not do this? Let's take that out. There we go. So there's the twist. We've diversified slightly. We've removed one there that is not stacking up. All right, price of 31, value of 32, RVRS, very nice. Okay, let's have a look. Watch this average graph. Here we go. There we are. We've improved it. So there's the twist. Just one or two little tweaks. That's all it is. We took out one, we put in two. That's all we did. A very different looking portfolio now. Okay, so there it is. Look at that. We've taken the net profit margin now up to 7%. And look at those sales. Okay, so when you're looking at your portfolios, it often just entails one or two stocks that often just need to be removed, and one or two put in its place, and it can make the world of difference. Now, is this a rock solid watch list of great stocks? Well, it could be improved a lot further. Okay, but this was just to simply take the supermarket, the big three supermarkets, and then just throw in one or two just to make a little bit of a change to improve things further. Now, if you're prepared to put in the time, an extra 5 or 10 minutes, you could make this a much more diversified portfolio, and you could make those parameters down the bottom and the watch list average graph much, much better. But I want to show you just how quick and easy it is there. Just one or two changes can make the world of difference. Hope you enjoyed this. Until next week, bye for now.